Hello, welcome to the first InspIR monthly interview. I am very excited to have this fireside chat with Monique Skruzny, CEO at InspIR. Thank you very much for dedicating your time to share with our audience your views on the current state of the capital markets, Monique. I think we can all agree that these are indeed turbulent times. So if I may start by asking your views on this first quarter of 2023, what are the key trends in Latin American and US markets right now, and how do you see them evolving from an IR perspective?
Hi, Alicia, and thank you so much for hosting this for us. This is exciting. It's an exciting opportunity for my colleagues to, on a monthly basis, share our experiences as well as expertise with our markets. So it is a moment that I have to say, it's a striking moment for me because it's a moment when I'm seeing sort of two parallel universes going on at the same time. We're all, whether it's the Americas, Latin America, the US, Europe, et cetera, we're all facing sort of three key elements that are impacting company reporting, company performance, investor behavior. And that's increased inflation across the board. So of course, Latin America is much more used to levels of inflation, and the central banks of Latin American countries actually have done a better job than in North America in controlling that. They started earlier with some of their policies than our market did. But we are seeing unprecedented rates of inflation in the US, things that we're just not used to. We also have seen slow demand, and this is as we look at and as many clients are comping what was happening during COVID. There are many interests in many industries that are facing tough comps based on the slow demand. And then also the third leg of this is, of course, increased interest rates. So at this time, we're seeing, the result of all that is a broad impact on top line growth and expectations, as well as for continued pressure on demand, as well as a lot of pressure on operating costs. So in both regions, we saw companies reporting on efforts to protect eroding margins. And this was with a greater focus on profitability as well, and vis-a-vis growth. What we were working on with our clients was being very specific around outlining operating efficiency initiatives. Many of them were centered around cost-cutting efforts. Those companies that could find leverage, this was a moment when they were demonstrating the leverage that they could find in their operations. And also there was, a focus on the balance sheet. So restructuring of the balance sheet to try to minimize the impact of rising rates. Certainly what stands out for a lot of us in the US, and I'm based, as you might see by my background, in the San Francisco Bay Area, is the massive impact of layoffs. Again, unprecedented. We haven't seen this for a long time, particularly in the tech sector, where tech companies really hired ahead of growth. In the case of Latin America, we've also seen this story play out, primarily, again, in the tech and fintech sectors. But mainly that growth was driven by the private markets, private equity and VCs, which were, in the last couple of years, Latin America was a heavy recipient of funding in the private capital markets. So it obviously has become much more difficult to raise money today. And our much anticipated IPO windows, again, has been delayed. So reaction to that is companies are taking action and also cutting costs ahead of this. I can't, everybody's heard about Silicon Valley Bank, and I can't not touch on that. Unfortunately, this was a tremendous surprise to everyone, how quickly the downfall of SVB happened, as well as the contagion that ran across to several other regional banks and then globally to Credit Suisse. So all of that happened in, between Wednesday and a Saturday, unprecedented. So as you can imagine, all this week, every IRO and CFO, and the entire team of management teams of regional banks, and not even regional banks, large banks in the United States, have been fielding questions from investors. The same thing has been happening in Latin America. So IR teams have been busy on the phones with their investors who are asking questions about risk and trying to assess not only the individual institutions, but get a handle on the regional financial system as well. As we look ahead, I think the real wild card for executive teams in the US as well as Latin America is the impact from China. So China's coming back online after significant lockdowns from COVID. And as a result, we expect significant demand for products and services. But this is also going to put a lot of inflation on, a lot of pressure on inflation and make the Fed's job even harder. And even though that's in the context of demand cooling in the US. The upside of this for Latin America is that Latin America, which is commodity driven, is a region that we expect to benefit from strong demand from China. And not only are they benefiting from that, but they're also benefiting from the fact that Europe is cutting energy from Russia and the US is cutting technology, semiconductors and manufacturing from China. So, LATAM stands, and as we've seen, is the sort of maquiladora sector in Mexico has been in the news, and as a result, Mexico also a market that is drawing much more interest from investors today. So we expect to see continued funds flows into the region, which creates a significant opportunity for IR teams to showcase, strong equity stories.
Yes, indeed. Thank you very much for that comprehensive overview. So with all of that in mind, what do you think, what are investors looking to hear about in Q1 earnings season?
So, we really think that investors are going to be keen to understand, first and foremost, if demand levels are falling because of inflation. And if so, what are management teams doing in response? Investors are also going to have their attention squarely focused on the balance sheet, debt servicing, and which companies are most susceptible to the rising interest rates. I believe that they're going to be looking at management teams to show their ability and their agility in managing costs and protecting the bottom line. Tactically, we expect that investors are going to focus on who the winners will be at this inflation game and who will have the ability to take market share in this environment. So, significantly depressed asset prices creates opportunities for M&A. We expect that investors are going to be asking a lot of questions about M&A strategy. Also, share buybacks for those companies that have excess liquidity. We believe that there will be many more questions about what the plans are for share buybacks.
Interesting. And perhaps ending in a more positive note, since we are reaching the end of this interview, given the current environment and moving beyond pure compliance and reporting, what are the opportunities that issuers have to actively engage with the investment community throughout the year?
Well, every IR program should always include various ways of engaging with investors, and that's whether we're in turbulent times or not. And some of those include attending bank conferences, scheduling NDRs, whether it's through your sell side analysts or independently, hosting investors on site, participating in bank-led bus tours, and importantly, taking the moment to solicit feedback and insights through perception studies, providing you with an opportunity for deeper dives through investor days, for instance. All of these are tactics that have been tried and true for a long time. The big difference today is that IR teams are facing shrinking number of conferences, shrinking number of sell-side analysts, budget restrictions on travel, as well as much higher or much lower appetite for risk amongst investors. So, we saw this last week. We saw, with the Silicon Valley Bank, with the whole banking crisis coming on, sort of a flight to haven assets such as government bonds and gold, which, creates, all equities and assets are competing for this capital. So it creates a more difficult environment. And this can be really depressing times for an IRO, wondering like, how am I going to get this attention? And but it's also an opportunity. It's an opportunity to highlight a great buying opportunity. And it's also an opportunity to really dig deep into taking stock on understanding what market expectations are for the company and how to best position for a longer term story. So right now, we actually have been really busy with clients looking at perception studies. They haven't done this for a long time. They're trying to understand, where the market expects them, what they understand of their strategy, and really how to position going forward. So perception studies is a great thing to be doing in this environment. It's a moment to tweak their strategies and plan ahead. Also, investor days are back, fast and furious. I mean, there was a birth of investor days during COVID. They started up again through virtual. I think investors are hungry and excited to sort of kick the tires and get personal again with management teams. And management teams want to take the opportunity to showcase showcase how they've been dealing in this environment, showcase the depth of their bench, and also help set the stage for 2024 and beyond. So all of this is happening, and it's happening both in the US as well as in Latin America. We're seeing this parallel focus.
Absolutely. Well, at least one of my takeaways is that, yes, these are challenging times, but it's also a right moment to plan and to understand how to navigate them. So thank you very much, Monique, again, for your time. I think you've shared a lot of interesting insights and takeaways that I'm sure the audience will find very valuable. So thank you very much again, and hopefully we'll have another chat in another time.
Absolutely. And thanks, Alicia.
Thank you.